Council. Seeing none, we'll move along. We have tonight, and we're pleased that so many people have contacted us and have expressed the desire to present on this issue. It's really important, we feel as a council, to engage the public in every opportunity that we can on every significant issue that comes along. And so you are welcome tonight to be in the gallery any council meeting you choose. You can ask to be a presenter on any issue you choose. There's a process to do that. You need to make sure that your request is in with some explanations no later than Thursday noon prior to any of our Tuesday meetings, and you're welcome at any of these meetings. Now again, we'll go in this order: Robert Barfus, Andy Strang, Glenn Jones, Wayne Greep, Delbert Beezer, and Don Card. Now, notwithstanding our pleasure that you are here and our delight that you are here, if you end up repeating the same thing that 2 or 3 people before you have said, you run the risk of putting everyone to sleep. So I'll leave that to you, that we want your information and your opinion is of importance to us. And you have the 15 minutes. If you take all of it and don't leave any time for Q&A, that's your choice. And so again, we welcome Mr. Barfus, and Mr. Barfus will be followed by Andy Strang.
Thank you, Mr. Mayor and Council. If Ryan didn't put you to sleep, then I'm going to make a good effort at it here, because basically what I talk about is a little bit about the math and kind of what Ryan's already talked about. Ryan actually really messed up my presentation for you.
Preempted.
Because he pretty much covered most of what I wanted to talk about. The one thing that he touched on a couple of times but didn't get into a lot of detail that I'd kind of like to talk about a little bit is that what we're talking about is an asset, and if we were to sell it, what we were to replace it with. The reality of it is right now, if we were looking at fixed income type investments, the guaranteed investments that was talked about, Switzerland just this last week issued a bond that was paying a negative interest rate. Government of Canada 10-year bonds right now are at 1.6%. So with inflation running at 3%, it gets pretty difficult for us to be taking 2% and putting it into an inflation protection to protect that $10 million and make sure that 10 or 20 years down the road it's still worth, in today's purchasing power, $10 million. The numbers that I went through just to kind of look at that a little bit in detail, and I'm going to jump through my presentation that I've given to you in advance here, so it's not going to flow the way I've written it out. But basically, when we're looking at inflation, if inflation continues to average 3%, which is what it's averaging today, it's averaged 2% for the last 5 years, and for the last 20, it's been 5%. So we're coming back to historical averages a little bit. That $10.2 million 20 years from now is only worth $6 million in today's purchasing power. So I'm really concerned about not just the fact that we can't control future councils and what they're going to do with that $10 million, but even if that $10 million was left there, what that $10 million is worth 20 years from now is going to be considerably less. Whereas if we kept our asset as we have it now, it should continue to grow with inflation, and making it 20 years from now, using that same 3% inflation rate, it's worth upwards of $18 million at that point. So it's a pretty big issue as far as future purchasing power goes. Where it becomes, or in my mind makes sense to take a look at selling the asset, is in what we do with those proceeds. And as was mentioned here earlier, buying Fortis shares is actually one of the things I think would be a really good thing to look at. Fortis shares have proven to be a good investment over the last 39 years that I looked at them for. And more than that, their current rate would pay us about $279,000 a year in dividends. Assuming one little thing, and maybe I'm going to get shot by Mike for talking about this, but Fortis right now has a program called a dividend reinvestment program, or referred to as a DRIP program, which basically, if you go and buy 1 share of Fortis, you can take the dividends from that and reinvest it back into Fortis shares, and they'll give you a 2% discount on the market price of what those shares cost you. So in our negotiations with Fortis, it might not be too far out of line to be saying we'd like Fortis shares in exchange for this, rather than the $10.2 million, and we'd like that 2% kick up on that as well. So if we were to do that, we'd be looking at about a $279,000 a year income coming in from Fortis. Plus, we'd have that inflation protection built into not on just the capital value, but also on the income that's generated from it. When Mike was here last time, I asked him some pretty point-blank questions, and one of the things I asked him was, what can we expect as far as rates go going forward? And every 2 years, Fortis makes their application to the utility board to raise their rates. So we can expect that they will continue to do that. And as an administrator of a business, I would expect that they would continue to do that, which would also mean that we could expect our dividends would continue to go up with that as well. So I guess to kind of make my presentation as short as possible and make up for Marianne taking more than time.
You can get away with that.
I would probably personally be in favor of the sale of it under the conditions that we were able to purchase Fortis shares with it, and that we were looking at it as an asset, that this is a utility that we're selling and we're purchasing a utility with it, and that and the biggest reason behind it being simply the inflation aspect of trying to protect ourselves against that.
And thank you very, very much, Councillor Cronin.
Mr. Barfus, I just would like to know something. Your presentation assumes that you would invest 100% of the 10.2 million into shares, correct?
It does.
So in other words, you put all your eggs in the same baskets.
We're basically trading one utility for another utility. So in effect, we're not changing our risk level at all. We're now a smaller portion of a bigger part of a utility, but it's still just the same utility.
Right.
So yeah, absolutely.
But you also looked at the portfolio of Fortis, knowing that 65% or so is really utility and 35% is anything else, but that is real estate.
Hotels.
Yeah, Fortis is a diversified company. Oh yeah, there's more to Fortis than just straight utilities.
So you are assuming that the risk level is low?
Fortis overall is a regulated company as far as their returns go. So
but
yes,
you also noticed that there were some dips at times.
And if you sat down and valued our utility here at the same time, we had the same dips.
Okay.
And so that's why I used that as the example, is because it's really just trading one utility for another.
All right, so I understand your perspective.
Any other
Thank you.
Comments or questions, Council? Rob, thank you very much, and you know, I do appreciate brevity. Again, everyone has their option to take their 15 minutes. And next up is Mr. Andy Strang. And following Mr. Strang will be Glenn Jones.
I appreciate the opportunity to discuss this matter with Council Fortis and Kevin Phillips. I have a couple of requests, and you all have a copy of this. I request that the members of the public be able to speak more than once and ask questions of Fortis representatives and Kevin Phillips and the Council. And I would request that assurance from Council that the question of the sale of the electrical distribution system not be decided by Council immediately following tonight's presentation. I request this so that the public will have time to speak to councillors about the information after it's gelled and sober second thought has taken place. I feel like in my experience that there's so often that you go away from the meeting and you think about it and you think, gee, I sure wish that I could make a couple more comments, talk to the councillors and so on, so that's why I requested that. Next you'll notice that I had about 10 questions or so there. Basically all of these questions have been either answered by consulting with Marion, consulting with members of the council, or this presentation tonight. So therefore, In order to make my presentation quite short, my conclusions are, after reading the available printed material and attending one open house, and viewing the June 12th presentation via Channel 32, talking to 2 councillors and town administrator, I'm still inclined to favor the retention of the system. I feel there is some comfort in investing our money in the distribution system that we have in place and a long history of operating it satisfactorily.
Mr. Strang, thank you very much. Comments or questions of council? I'm seeing none. Thank you very much. Again, thank you, Andy. Dr. Glenn Jones, please.
If I may hobble around here and make a presentation. Thanks very much to Council for permitting us to make these presentations under these circumstances. I've also been very impressed by the presentations made by Fortis. These people are very good. They know their business very well. In fact, sometimes I'll almost say that they're fairly slick, but they do know their business very well, and they're out to sell something, and they're after something, and so they're good at it, and I'm glad that they are. I made up a presentation and gave it to each member of council. I also published it in the newspaper. I'm not going to insult your intelligence by reading that to you. I'm just going to make a few comments about it further to it. One is concerning the promise of Fortis. If they take over, they would hire our employees. And I find it interesting to, and I haven't forced our members of our electrical staff to answer whether they would prefer to work for the town or for Fortis. That would be conflict of interest on their part. But you know, they are working for the town, and they seem to enjoy that. And they didn't go and apply to Fortis, what they could, whereas they could have. And so I think this is kind of an interesting situation. When it comes to emergency situations, you know, say Fortis is well staffed, they have more people, but when there's emergency situations, they're much broader than the town of Cardston. And the emergency situations that have occurred within the town have been handled by our staff extremely well, and some of them have been very, very serious. And so this nice little staff that we have, I've enjoyed this. Now, as far as the value and this inflation thing, and this is a very serious thing, the first time I heard about any outside interest in our electrical system was when Calgary Power approached us back in about 1975. I tried to find the amount that they offered at that time, and I couldn't find it in my ancient notes and things. However, the offer that was made in 92 to 95, my term on council, the figure I have is 2.6 million. I'm not positive that is correct, but I'm quite sure that it is. And if that is the case, we made pretty good for you, I think, bringing it up to 10.2 million. There's one thing I'd like to put to rest, and that is that our system has never been neglected. Even though it may have become outdated, it has never been neglected by council. There's one difficulty that you have, and this is true in the medical world and in the health world, where there are new and different inventions that are demanded by Joe Public. You know, I had a little stretch in the hospital not long ago, and there were things that were made available to me that were unheard of not very long ago. And this is something that is true of anything that goes on in our world today. So the fact that the idea that the system has been neglected is never true, is not absolutely untrue. There's these new things that have come along and are expected to be in the system, and so and this will continue. So the system, regardless of who owns it, Fortis or the town, these demands will increase because the technology will improve, and the investment will be, the demand for investment will continue to rise. And in my letter, I stated that who pays this $10.2 million? Well, you and I are going to. Now, we've been told that Cardston isn't going to be slapped with a special rate to pay for this, but companies such as Fortis, and I hope this is true of all of them, are profit-oriented. And spare us if they're not. But this is something that they are going to take from us to pay that $10.2 million. Without repeating the information in my letter, I would just like to say something that was about a comment that was made at one of the previous open houses, and the one that was likening our operation to the old rural electrification system. And I don't know whether you remember that or not. Some of you are as old as I am. I remember digging power pole holes by hand for them, but a modest salary. My father-in-law was secretary of the REA from its inception until its demise. Calgary Power, who was the ongoing company at the time, refused to go in and install the system. In other words, they were not risk takers any further than Fortis is today. They wanted the individuals to take the risk and establish it, make it profitable, and then they were willing to buy it. And this is still the case. And it's good business, I promise you. But to liken what the town has to the old REA systems is quite unfair, because the town does not have volunteers, it has employees, it has even paid councillors. Paid generously, I might add. I've had 4 terms on council. It's a stipend. It's better than nothing. But it's well organized as our town system. We have excellent employees, and so to compare that to the old REA system is rather unfair, except to the fact that it was a system of establishment, becoming profitable, and then the large company being quite willing to take it over. And with this, just like to remind council, and every time this has come up on my 4 terms on council, it's come up every time with ever-increasing amounts of money and grander offers each time. But once it's gone, it's gone. You're not going to get it back. You can feel sorry about it as much as you want. But this is something that I hope you remember very well, is that if you take and decide to sell it, it's gone. And I assure you right now is not a good time to accept $10 million and try to find a place to invest it. So with that, thank you very much.
Okay, Glenn.
Oh, pardon me.
There could be some questions.
Gosh, I give the questions are easiest, the answers that get tough.
Do you, Council, do you have any comments or questions you'd like to make? Okay, false alarm, you may rest your legs.
See, I know it.
You may rest your legs. Is Mr. Greep here, Wayne Greep? I don't see Wayne Greep, so we're going to move down to Delbert Beezer. And Delbert Beezer will be followed by Don Card.
Thank you, Mayor and Council. I submitted an email, I think Council got it, that identified my points, and a lot of them have been mentioned tonight already. Just some history for some of you councillors that don't know what my job is. I manage Chief Mountain Natural Gas Cooperative. We service the rural area of the town of MD of Cardston, County of Cardston, and the MD of Pincher Creek, MD of Foothills, and the MD of, forgot the name now, way up north of Pincher anyways. We're a member-owned cooperative. I fully understand the costs and risks associated with the distribution system, whether it's power or gas. There are risks, no matter what kind of company runs it. And my comments are nothing against Fortis. We work with them just about daily in the negotiations with construction approvals and line locates and those kind of requests. And their staff are very good, and so there's nothing that I have against large corporations, except for one thing, and that's community. And that's what I'd really like to address tonight. Cardston has had power systems since power was invented. I don't know if it was 1905 or 1915. I wasn't there. Glenn, do you remember?
Sure.
And I served 3 terms on council. They were those glorious years that were shown on Ryan's presentation. We were making a lot of money. They were also very frustrating years because it was during the deregulation process. And the one thing that deregulation did was allowed large corporations to gather money. And from the original Calgary Power Company, TransAlta, Alta Link came along, Fortis came along, the Alberta Utilities Commission came along. Right now, currently, Alta Link has an application, just to let you know what rates are going to do. Regulated companies are allowed to present, as was mentioned, every 2 years, their forecast for operating costs, and they're regulated a certain percentage of return. Alta Link, in the next 2 years, 2014, their revenues are going to double from what they are currently. Now, if that's based on operating, then I know what my transmission rates are going to be doing in the next 2 years. We don't have control of transmission, as was mentioned. We do have control of distribution as a town, and as I consider myself a taxpayer of the town and therefore a shareholder of this electrical system. It's important to me to know that it's a community infrastructure asset. And I would recommend to council that you not consider selling. I've seen councils change. That $10.2 million could be done in the next election. It could be spent. And what will be next? What, will we sell our water asset, our sewer asset, our garbage asset? What will we continue to sell? I don't know what happens with our rates when we go to EPCOR, the regulated rate option. Is the town still going to do the billing system? Because currently they do it with MMAX now. EPCOR will probably want to, I don't know if they've looked at that, but there will be costs involved there. But I strongly encourage council to not only think about this generation of townspeople, but the future generations. I'm grateful to have power. I'm grateful right now to be able to phone a local phone number and have somebody physically to talk to. And nothing against Fortis, but I can have somebody there that understands my situation. If I need a meter removed to replace my siding, it can usually be done the same day, and that's a great service. So I encourage council to keep our assets, all that we have. If you need to raise rates, raise the rates. As townspeople and taxpayers, I don't think we're going to care. Because you're going to raise taxes if you sell. The franchise fee is just another way to tax, and it can be set from 5 to 20% set by council. Just the same as the ATCO Gas franchise. So it's just another tax. Anyways, that's my presentation.
Thank you, Delbert. Your comments for Mr. Beezer? Seeing none. Thank you, Delbert. And up next is Don Card. Now, as Don's getting set to go here, at the conclusion of all of the scheduled presenters, I will allow a summation, a wrap-up, if you will. So, Mr. Phillips, you'll be allowed 5 minutes, if you choose, for a summation. You know, you may have heard things that you want to say, no, not exactly right, or you may have heard things that, you know, that's great, I want to emphasize that. The same goes with Mike. So you'll have a 5-minute summation at the end of Mr. Phillips' 5-minute summation, which will follow Mr. Card. Thank you, and Don, welcome.
Ladies and gentlemen, I want to thank you for the opportunity to present my opinion on the sale of the electrical distribution system to Fortis, and hopefully to explain my reasons for my opinion. I had passed out to council the details of the 4 pages that I will present. First, I want to state that Fortis Incorporated is not a synonym for fairy godmother. This company is in business to make money and is managed by hard-headed businessmen whose purpose is to add customer base and to earn funds to pay their shareholders a dividend on their investment. I did a little research into the company, and one of the most significant items observed by the analyst is that although the industry is experiencing positive sales growth as a whole, Fortis Incorporated has been unable to grow sales and is losing market share. The analyst further observed there is no clear trend in income growth at Fortis Incorporated over the past 5 years. I don't know how Fortis Incorporated came up with the figure of 10.2 million, and this seems like a huge sum of money. But with inflation, this amount will be reduced in buying power in proportion to inflation if it is invested. It would also be reduced by investment in other ventures, which is referred to in the list of financial benefits. No details are given as to what other ventures the town might have in mind to invest in, nor what financial benefit would accrue to the town as a result. It is important to remember that the 10.2 million is the result of selling a capital asset which has been built up over a number of years. And if the capital asset is sold, future value will be built up to the new owner and not the town. In the interest of time, I will not attempt to comment on every example of areas where I have questions, but only the most significant that have a bearing on the desirability of finalizing the Fortis sale. It is noted that the 4160 volt transformer currently serves about 2/3 of the town. That was in the information given. I would therefore assume that 1/3 of the town is served by 25,000 kVA service, and this 1/3 has been converted at a lot less than the $2.5 million, which is recorded under the purchase offer as the cost of the upgrade. I have attached the following: Schedule A, financial estimates if sold, and Schedule B, financial comparisons for rate options if the town retains ownership. Both schedules indicate some changes from that presented in the information package given to me by the town. I'll just quickly go over Schedule A. The information has pretty well been digested, but the financial estimates if sold is not adjusted for inflation or the reduction in the buying power of the dollar. It's not adjusted for the undisclosed and unbudgeted cost of electrician salaries and related costs on town-owned facilities. So if we take the 3 years and have a 3% return on investment, we have $306,000 for all years. A franchise fee that goes from $82,000 up to $99,000, and as noted, we, the ratepayers or the town, pay that. The municipal portion of linear tax, $20,000 for all 3 years. Deducting an increased cost of street lighting and on town-owned facilities, $130,000, $140,000, and $150,000 in the 3 years. And PCB retirement, not in the Fortis Incorporated proposal, but listed in another area in the town's presentation. So the net revenue that we would get if we sell the distribution system is $202,250 $201,000 and $200,000. The next page is financial comparison for rate changes, rate options in town if the town retains ownership. This one is not adjusted for amortization because the conversion to 25,000 kVA service is increasing the value of the distribution system at a higher rate than it is decreasing because of age. And we start with the same figures that have been presented to you previously. I have added the capital expenditures to each one of those years because the capital expenditures are what we are selling. They've made what we are selling. And I've taken off of that amount that was presented in the financial statements the estimated cost of the town-owned facilities, which is, I've estimated $120,000 for all the years up to 2012. Then the town estimated $131,510 and $142,465, $155,458 in those 213, 214, and 215. And then they said they wanted to take a charge for an estimated PCB retirement of $75,000 for each of the years 2013, 2014, and 2015. So when we get apples to apples, we have in 2007 $535,000 coming from the electrical system. 2008 $447,676. 2009 $429,000. 2010 $345,000. 2011 $355,000. 2012 $439,000. 2013 $341,000. 2014 to $333,000, and 2015 $318,000. Now, if you take the Fortis rates for those last 3 years, 2013, 14, and 15, and you add the estimated cost of town-owned facilities and the conversion to 25,000 kVA, $150,000 a year, which was given in the town's presentation as the cost, and the estimated PCB retirement taken off, we get an adjusted estimated net at Fortis rates of $421,000 in 2013, $427,000 in 2014, and $439,000 in 2015. And you can compare that to the $200,000 practically that we would receive if we sell it to Fortis. So, just in conclusion, these schedules, when adjusted, clearly indicate that it has been in the town's best interest to have owned the electrical distribution system in the past, and it is to the town's best interest to retain ownership of the electrical distribution system in the future by as much as $200,000 per year using the Fortis Incorporated rates. Although there is a provision in the offer for the town to buy back this electrical distribution system at the end of the 10 years, it is my opinion that the buyback will be at a much higher figure than the sale because of the conversion to 25,000 kVA and other improvements that have been made, and inflation, and the town will be unable to justify the buyback at that time. It is my hope that Council will carefully consider all the implications of selling this important income-producing asset and will decide in favor of not selling to Fortis at this time.
Thank you very much. Council, comments, questions? I'm not seeing any. Thank you very much, Dawn.
Thank you.
And now we'll give the podium to Kevin Phillips, if you have some